Sound check, sound check. Sound check, sound check. Hello, guys. Welcome back, guys. Let me check something important before we start. Multiple output. It seems like Telegram has started as well. Wow, we have 15 viewers already. Okay, seems like everyone is back to the class, guys. Welcome back. Welcome back. So, apologize for, being 17 minutes late. I'm still in my hometown, which is a small state in Malaysia, which is Penang Island, Pulau Pinang. And I'm using my laptop for, today live stream. A few things need to, adjust. So therefore, took me some time. Always feel frustrated dealing with technical glitches. But anyway, welcome back to Profit in Peace. Welcome back to our Orex community. Now, before we start our class today, let me check with everybody. Is everybody having a great time in Chinese New Year? Anyone is Chinese here? Well, happy Chinese New Year to you guys. We have Cassian, we have Alaric, we have Sam, and we have Frop, right? And also we have Alan. Okay, Alan is also back to the class as well. Guys, welcome back. And well, it's gonna be a fun session today. 15 viewers, small session is fine. Let's put into the work and learn together. All right. So first thing first, let's warm up a little bit and get to know each other a little bit, because among 15 viewers in our live stream, I know that some of you are actually new to me, and maybe this is actually your first time in my class as well. Now, my name is Calvin. You may call me CG, C and G, and I'm the person in charge. I'm the one that is actually leading, Profit in Peace and Orex Academy with another two partners of mine to produce educational content that might help you in your trading journey. So Profit in Peace is actually a trading course that I designed, tailor-made for traders that want to get serious in trading, and more importantly, serious in a way that is making you feel peaceful, right? Not serious and hype you out. Okay, so that is why I call my class Profit in Peace, because I want all my students to really learn how to be zen, be mindfulness, and be peaceful in the market. The market is full of noise, and we really need to learn how to adapt internally and to feel calm when we trade. So no matter you're on live stream, you're trading, everything, you need to make people and make yourself feel calm and zen so that you can trade. So we have Tamsin, a great intuitive teaching method. Thank you very much. So yeah, without further ado, let's start the class today. So I've prepared some teaching materials for you guys, and today we're gonna talk about a very interesting, very interesting thing that every beginner needs to learn before they trade the market. Okay. Now, before we start our class, I want to make sure everybody is ready. If you guys are actually listening to the class right now with me, please click ready in the chat box to show me that you guys are ready to learn. After Chinese New Year, we are back to the market. Friday afternoon, 2 p.m. We're going to start to trade again. All right, are you guys ready? If you guys are ready, click ready in the chat box, okay? All right, now let's start. Okay, today we're going to talk about the main hypothesis that I use in the market. Okay, the main hypothesis that I use in the market. You need to understand, the market is a very noisy place, and the market is not a place where you predict where the price should go. Okay, I'm going to repeat. The market is a very noisy place. Let me check. Are you guys actually listening to? All right. Okay, cool. All right. So, auction market theory is actually a hypothesis that I use to trade the market. Now, why do I say hypothesis? Okay, why do we need a hypothesis to trade the market? Because if you don't have a hypothesis, it means that you are basically using your emotions and you are using noises that is happening around you to trade the market, which ends up emotional trading and revenge trading, right? So what I want you to understand, today is that no matter what kind of style you are planning to learn, no matter what kind of guru or teacher you are planning to pay for the courses to, you need to ask the very first question that you need to ask yourself, and also ask, the teacher that is teaching you, what is your main hypothesis for your edge? What is the main hypothesis, for everything that you just say? Now, right here, I'm going to reveal to you guys what is the main hypothesis me myself use in the market when I trade it, right? So I'm actually using auction market theory. Okay, so what is auction market theory? It's actually a many years, decades in research, and it is a pattern that is repeating itself for decades. Okay, no matter it is in forex, commodities, in crypto as well. So what is auction market theory? And more importantly, I need you to understand what is actually a hypothesis, right? A hypothesis is a working assumption about how the market behave over time, okay? Where the price action rigorously tested across diverse situation, okay? So this is a hypothesis. Now, I'm going to give you an example. Let's say you go out and then you see the sky is in, grayish black color, okay? And it is extremely windy. So your first instinct would be bringing an umbrella going out with you, right? You're gonna bring an umbrella with you. Why? Because you are giving yourself, you are having a hypothesis where, gray sky, windy day means storm, means rain, right? Therefore, you bring an umbrella. But hypothesis is something that is high in probability, but it doesn't equals to 100% guarantee, right? There are times where you bring the umbrella outside and still nothing actually happens, right? There's no rain, there's no nothing going on in the weather, right? So this is a hypothesis. Now I'm gonna share with you guys, in the financial market, when you're trading forex, you're trading every instrument, you need to have a hypothesis as well. Now for me, why do I actually pick, auction market theory as my hypothesis? Now first thing first, I started off trading by learning with trading gurus. I started off trading by downloading indicators. I'm collecting information pieces, fragmented information and wisdom, pieces by pieces, and I end up making myself much more frustrated and lost. My brain is noisy, and I don't know how can I actually trade the market sufficiently. And therefore, I understand there must be something that is not right from the upstream. I'm always solving problem in the downstream. Okay, so I start to think from upstream, and I start to ask myself this question: what is the actual pattern that is always repeating itself in the financial market? Now, I would say that I'm a very, lucky person, and so do you guys, right? We are lucky and fortunate to live in an era where information, pattern recognition, um, is abundance. Everybody have access to artificial intelligence. So since 3 years ago, I start to really integrate artificial intelligence in my pursuit of trading. And I start to learn about patterns. I start to learn about calendars. What is actually happening across the regime? Now, what is actually happening is that what happens along, you know, every different kind of regime, every different kind of time frame and instrument, it is something that is so profound and always repeating itself is what we call auction market theory. Now, you need to understand, when we trade as a retail trader, even though if you're an institutional trader, right? If you go to the market, you are always trading in a very incomplete information. All right, market operates under uncertainty, and no one actually sees the full picture. And we have human bias, we have market noise. We retail traders are really easy to be influenced and become emotional when we are participating in a very noisy market. From the brokers, from gurus, from news, everything, we tend to be very frustrated easily. Okay, and number three would be, we need to have a structural edge over prediction. We cannot really predict where the market actually is going. So we need a repeatable framework with a positive expected value. Not guarantee, not certainty, but we need a repeatable framework that is always happening throughout the cycle. So we need to build a structure together with, the cycle, right? So therefore, I use auction market theory as my main foundational hypothesis for everything that I trade. No matter I'm doing swing trading, no matter I'm doing, it can be like intraday trading, but still I use auction market theory as my fundamental theory to trade. Okay, so now cut the long story short, what is actually auction market theory? So I want you guys to think of market as an auction between people who want to buy and people who want to sell. Okay, when buyers and sellers they agree on a price, well, trading happens easily, right? You want to buy and I want to sell, so we exchange, we swap. So the price, when the market is actually being agreeable, where buyers and sellers are, well, comfortable in the price range, it actually means that the market, you see, the price action is moving in a very stable, ranging, sideways, balanced market, right? But if someone actually decide, very keen to buy or sell, like maybe, yes, I want to sell this amount, but you want to buy this amount, right? Maybe, or you want to sell this amount and I want to buy like this. So it means that me and you, one of us are really, becomes super keen to buy or sell, and the price, the price actually shift to find a new level because, everyone needs to agree on a different price. Okay, so this is, I'm gonna give you another metaphor to really understand what is auction market theory. Okay, for example, you are selling apple on a street. Okay, and then there's a second store that also want to sell an apple just like you, and then there's a third store, and there's a fourth store, then a fifth store, and then the whole street now become, you have 5 different people are selling the exact same apple. Now if business are good, tourists are coming down, then it's fine, right? But if one of you guys, about along the 5 people that sells the apple decided to sell it cheaper, then it forced the other 4 of you to change, your price as well. Okay, so this is actually what is the market being formed of. This is the dynamics of the market. It is not only happening in the forex market, it's happening everywhere, right? So price move to allow trading, not to predict what will happen next. Okay, now here I want to show you guys, what is the spine, the backbone behind the market movement. Okay, the backbone is very simple. It starts from balance, right? What is balance? Balance means that buyer and seller agree, buyer and seller actually agree with this price. Okay, I'm happy with, euro US dollar, I'm happy with $1.01, you are happy with, $1.01 as well. Is balance, all right? And when you see that in the market, in the chart, as I'm going to show you later, it is actually very balanced. Okay, and then it start to have compression. Okay, why does it have compression? Because that will always have people with different expectation, with different opportunity costs, different ambition as well, different desires to decide to sell more or buy more, right? So this is actually turns into compression that is being reflected on the market. And then, it forced the entire market to go to expansion, which is, breakout from the range. and then it will start to have a pullback to restrict or reverse the previous position where more people agree that it's still in the range, and then it will start to form a new balance, right? Achieve a new stable equilibrium point. So this is the market cycle. So I want you guys to understand, markets always rotate in agreement, tighten in uncertainty and move in urgency, okay, and settle in new value. So I want you guys to really understand this phrase, okay? Market rotates in agreement, shake hands, tighten in uncertainty because somebody want to sell more or somebody want to buy more, right? And they start to move in urgency because it forces other people, they force other people to move, and it settles into new value, which is you start to form a new way of balance, okay? So this is the market cycle. And you really, if you look at the chart, guys, this is what I mean, right? You have a balance, okay? You have a balance right here, okay? And then this is where the buyer, the seller and the buyer, everybody just agrees on the price. This is what I call by balance. And then it has a small compression and then a breakout and then a pullback, and it start to form a new balance as well. This is what we call, the market cycle, okay? Now, what I want you guys to understand, where does retail traders actually being trapped, by the cycle? You see, what the market is doing is balance, compression, expansion, and pullback. Okay, and what a lot of retail traders do, what I do, back in those days, overtrade inside the balance. You anticipate the breakout too early, you chase expansion late, and you panic during pullback, right? So this is what a lot of retail traders actually do. But I want you guys to understand, the market follows structure, but retail's emotional follow movement. So our emotions tend to be pulled by the price action, by the movement, but the market is just following structure. And this is the structure. The structure is balance, compression, expansion, pullback, new balance. Balance, compression, expansion, pullback, new balance. This is a structure. It just moves this way. If you're happy, you're sad, you're excited, you're disappointed, the market doesn't give a fuck about what do you feel. It just moves this way. Okay? So what I want you guys to understand, you need to really train yourself to follow, the cycle of the market instead of being pulled by the market cycle. So I want you to understand, a lot of time my student ask me, so CG, what is right and what is wrong? Now you reveal to me the market cycle. How should I trade? Is this right and is this wrong? Guys, I want you to understand, there's no right or no wrong, because every phase of the market offers us a different kind of opportunity. Okay? Every phase of the market offers us a different kind of opportunity. And losses doesn't come from the phase itself. Okay? Losses actually come from not knowing which phase you are in. Agree? Okay? Losses doesn't come from the phase itself. Losses come from not knowing which phase you are in, right? So here's the number one rule before we trade today, before we analyze the market today. Rule number one, I want you to train yourself to give attention but not paying attention. Okay? I'm going to repeat myself again. The very first thing that you do when you open the chart is to give attention but not paying attention. Okay? Because when you pay attention, you're probably going to lose money. But if you give attention, you're not going to lose money, right? Because you're just giving attention. Okay? So I want you guys to give attention on the cycle. Give attention to the phase, but not paying attention. Don't be so impatient. Just give attention. Okay? Now, what is my approach, trading the auction market theory? I have two approach, okay? And one is for swing trading and one is for intraday trading, okay? For the short-term trading that I always use on live stream, I call it the Agreeable Rotation Model, ARM, or you can call it ARM, okay? So ARM is where I monetize on market acceptance, where the market buyer and seller are still comfortably, agree on that segment of the market. Okay, so this is the model and strategy that I use for short-term intraday trading. Okay, it is designed for stable markets, and ARM actually profits from price oscillation and mean revision. Okay, so we only target control gains and price return to the average. okay? And the second one is the one that I usually teach for my VIP class, okay, where one-to-one coaches, where we hunt for the asymmetric profit, okay? This is what I call the second wave probability, which is SWP. So second wave probability, what we do is that we monetize on rejection, okay? But today, I'm gonna teach you about ARM, okay? I'm gonna teach you about Agreeable Rotation Model, which is really, really easy to learn for a lot of retail traders if you really give attention, okay? So I want you guys to ready. So first thing first, before learning how to use ARM, okay, you need to understand ARM, which is ARM, only works when the market is in agreement. Okay, I'm going to show you guys how to know the state, how to know that the market is in agreement. Now, here's the thing. During our live trade, I'm going to show to you guys, I want you guys to remember there's only two phrases, arm on and arm off. Okay, arm on, and arm off. Okay, arm on and arm off. Okay, now here's the thing. What is arm on? Okay, arm on is where the market is being agreeable. Okay, it's being agreeable. This is what I call arm on. Okay, the price is inside the clear range, you know, overlap dominates, okay, and breakout filling. Okay, this is what I call by arm on. And arm off is where I'm gonna like forget about it. I'm not gonna touch it. Okay, because you know, strong close outside the range and pullbacks fails to re-enter and continuation structure forming. Okay, so this is arm off. Okay, on and off. So later when we go to the live stream together, the live chart together, I'm going to show with you guys what is on and off, okay? And the market selection, we're going to focus on three, okay? The first one would be gold, and the second one would be two major forex pair, which is Euro US dollar and GBP USD. Now, why do I choose them? Because in order for us to really use ARM to trade, we need, you know, liquid instrument. We need rotations, you know, that really requires genuine liquidity. So thin market movement, you know, often fake true rotation. So we want true rotation, okay? So time frame structure, I'm going to use, you know, the H1 for context time frame, the anchor point 1 hour chart, and execution time frame, I'm going to use M5 and M1. You know, M5 as primary entry, M1 as, you know, to further emphasize fine tuning the entry only. Okay, so M5 would be the primary where we do the execution, but H1 will give us, you know, overall intraday range. So entry model, very simple. I'm going to show you guys in the screen later. Position size. Now, I want you guys to understand. For position size, I'm going to use 0.7, maximum 2 lots. Okay, the size is adjusted by structure, not on emotion. And the risk per trade, I'm aiming for 1, you know, 1 to 5 and 1 to 2. Okay, session control, maximum 6 trades. And if I take 2 consecutive loss, I'm going to pause and change to another market. All right. Now here, before we start the live trading and live analysis, I want you guys to have a very clear understanding. Okay, important risk disclaimer. So risk disclaimer would be, today's lot size reflect my live trading setup. Okay, I use this lot size because this is what I use as, you know, a live trading teacher. Okay, and there's a subtle element of me, you know, is for marketing purpose as well. Okay, not only it is for my trading profit, but it is also, I want to help you guys to understand I'm paying a little more, I'm bearing a little more extra risk because that I want, you know, my student and my audience on YouTube, on Twitter, on Instagram to actually enjoy the excitement together with me. So for the live execution notice, I want you to understand the lot size that I'm using is actually not the lot size that I trade, you know, when I'm alone. Okay, and it does not represent recommendation sizing for your account. So don't follow my lot size, okay, because this is actually for me, you know, my role as a live stream trader and also as a teacher as well. Okay, so for your personal accounts, I want you guys to risk not more than 1% of your trade. I want you guys to use smaller lot size, 0.3, 0.5 lot, depending on your account size. And I want you guys to adjust the position size for your own capital and risk tolerance. Last but not least, trade responsibility and protect your capital at all costs. Okay, now without further ado, let's go into the market and I'm going to teach you guys what is, you know, how do we actually trade by using the agreeable rotation model, which is what I call the arm model, okay? Just a moment. Now, before we start, let me deal with some technical glitches. Just a while. Let's take a look at the gold market, all right? A moment, guys, because right now facing some technical glitches. Let me sort it out a little bit. Using a very different, it's been a while since I used my laptop to do live stream, and damn, I really hate it when we are using, different kind of setup, a lot of technical glitches going on. So bear with me a little, and let me just sort it out, okay? Okay, guys, wait for a while. Let me restart the OBS studio. I'm gonna come back to the screen later. All right, we have 19 viewers in the live stream, but give me 5 minutes. I'm gonna restart the OBS studio right now so that I can show you guys the trading view. So just 5 minutes, okay? Hey guys, now let me. Yep, we're back on track. Let me see. Hey guys. All right, we're back on track. Okay, cool. Yep, we're back on track. Let me see. Final check before we start. All right, good. Okay, so let's go back to the market and have some fun, using ARM together, okay? Before I start, let me see, is it okay for us to take a look? All right, nice. Okay, now we're gonna focus on three pairs. We're gonna focus on, I'm gonna remove all the drawing. So we're gonna focus on gold, Euro GBP, and Euro USD only. Now let's start from the gold market. Okay, it's Friday. Let's take a look. Now, first thing first, when we use the ARM trading strategy, the first thing that we need to understand is to really go to understand where do you use as your reference. So for me, because ARM is actually trading the intraday trading, so what we're gonna do is to spot, the range. Is the market currently in, compression or in a balance? Okay, so right here, I'm gonna draw the trend line. So we're gonna see the first thing is ARM on or ARM off. Okay, that's the first thing that we want to take a look. So right now we're gonna come here and then we're gonna write, the trend line. Okay, so here in the 1 hour chart we have a very obvious, price rejection point. You need to understand when we're doing like ARM trading, what we're actually doing is that we want to trade for we want to monetize on price acceptance, okay, instead of price rejection. Right now, right here you see the price, one level is not enough to give us the message, but right now we're gonna have a second level so that we can understand where is the price currently, being accepted overall. So I would say it is somewhere around, this zone right here. Right, it's around this zone. Okay, we want to understand where is the price, being accepted. So for acceptance, we're going to use the candle wick, or we're going to use the candle body instead of the wick. All right, we're going to use the candle body as a reference point. So because it's ARM, and if we are trading, SWP, we're going to use, the wick as a reference point. But right now we are looking for acceptance, okay, not rejection. So we're going to focus on the closing price and the opening price of each candle. Okay, so right now we have it here. Okay, we have a small little range, of balance continuation forming right here. Gold, XAUSD, but is this a formation that I'm looking to? Well, to be honest, it is not something that I personally think that it would be a range. The only reliable signal is somewhere around here, but still, let's take a closer look. Is there any potential, compression going on that we might not foresee? Now, first thing first, a potential, compression that might be really happening right here would be this one. But it seems like, there isn't any, breakout that is happening right here, which means that the compression itself is already being invalid. Okay, because if the compression is valid, usually it will goes here, all right, and then come back down and goes up. All right, but it seems to me that it is not really valid because it's already, instead of breaking out from this area right here, it start to form another continuation. So which means that, this would be serve as a very good, signal where we might have the chance for ARM on, okay, which is agreeable rotation model. We have an agreeable rotation model somewhere around here. Okay, ARM on. Okay, so a agreeable rotation model. Okay, somewhere around here. This is what I call agreeable rotation model. So it is still valid. Now let's take a closer look at the 30 minutes. Okay, the 30 minutes time frame. Yep, it's still playing around here. Then let's go to the 5 minutes and take a closer look. Now if you zoom into the 5 minutes, it is actually much more obvious. Okay, it's actually much more obvious. You know, the current price is actually playing around this zone right here. So this is where, you know, where we can actually, you know, trade the ARM, this whole section. Okay, now first I need to understand, before I place a trade in the 5 minute chart, I need to understand, you know, how does it makes, you know, the entire trade invalid. So I'm going to go back to the 1 hour chart, 1 hour time frame, 1H, and I need to ask myself, what happens to the market that will prove ARM from on to off? Okay, so what is, you know, what does it make, you know, the ARM actually, you know, went from on to off? Now I would say that if, you know, a new compression is being made, let's take a look. Somewhere around here. Okay, you see a potential compression. Okay, this compression is being made and it breaks through and then it hits. This is still not considered compression. It is back to this zone. No, not this one. We're gonna seek for the price acceptance. Okay, so now what would make me wrong? Okay, now if this candle went from here, form a compression, break out to this point, and then it comes back, and then it goes here, goes here, goes here, goes here, and then it forms another layer and try to challenge, you know, for a new market, then it will makes me, you know, the whole you know, the whole setup would be invalid. Okay, but right now, you know, we still have plenty of room to play with it. So first thing first, we need to understand, now what would make my trade, you know, a false trade? Okay, I need to come here and then we go back to the 5 minutes. Okay, so right now it is still I mean, tradable, but we need to be very careful with this little entry zone right here, which is the friction that might form a compression that is going to, you know, test it out. But right here we already have a pullback, you know, it started already charged out, we have a pullback, and then when the market re-enter this zone, okay, and if the candle didn't actually, you know, bounce back and go up, we're going to place a short trade around here. So let's wait for the market, you know, to test this zone right here, and then we'll see how it goes. If not, we will stand by around this zone, okay, to place a short trade. Okay, so XAU US dollar, you know, looking for a short trade around this section. So I'm gonna, you know, aim for 1 to 5. Yep, somewhere around this. Okay, this would be a good setup, but I still need a little bit more confirmation where, you know, the pullback, is it like being, you know, is it being accepted or not? If it's not being accepted, I cannot place the trade. Okay, so we're looking at this one. If it breaks through, okay, if it's breakthrough, and then if it goes up, it means that this is not a good trade. Okay, but if it breaks through, okay, but it didn't actually, you know, I'm going to wait for another candle, but it didn't actually go all the way up, and then it would be a really good time for us to make a short trade around here. But for now, it is still okay. So I need to write, you know, there's a line here, okay, to prove that it is going to be, you know, a trade that is slightly, I'm going to put my stop loss here, and then I'm going to put it, you know, 1 to 5. This would be a good setup. Okay, so XAU US dollar, I'm going to place a trade short, okay, but I'm going to wait for this candle, you know, to finish. You know, I'm going to wait for another candle. Okay, yep, let it charge through, and then let's see if the price is being accepted back to the range or being rejected. Okay, if it's being accepted, if the next candle is open right below this frame right here, I'm going to place a short trade. Okay, let's wait. Countdown 40 seconds. Countdown 40 seconds. I'm gonna do a sell stop. Okay. Well, it seems that it's being rejected. Yep, it seems like it's being rejected. Let's wait for another confirmation. Okay, we can put a sell stop right here. Okay, sell stop at 5017, 5017. Let us wait for a while. Let's take a look at the 1 hour chart to see, what is the market range actually like. So for gold, it is kind of risky. I'm gonna give you guys, something that I personally think that's risky. You see, if you base on the chart and you can see has a very obvious, compression structure is being formed right here, which means that we are actually in a 50-50 situation where it's either the price is going to charge through the compression and start to, retest, the ceiling right here, and then being rejected and then comes back. But right now, it is not really in a situation that is still tradable to me because, the price is moving in a way that is slightly uncertain. So right now, usually what I do, I'm gonna erase this. The market didn't actually, go back down here. If just now what happened to the market is that if the market, after this candle open right here, and then it start to form, lower lows, then it will mean that it is actually a good chance for us to trade. But right now, what happens to the market is that the price is actually, compressing. It is in the phase of compressing. So ARM off if you look at intraday trading, because it's actually forming a compression. Okay, and we don't trade compression. Okay, for information, we don't trade compression. For ARM trading, we don't trade compression. We only trade, tradable, agreeable, range that the buyer and seller agree. But now it seems like the buyer is much more keen to buy, right? So to me, for this one, I'm gonna, after some scanning, I would say it is ARM off. Okay, ARM off. Now the reason behind ARM off is that due to obvious market state of compression. Okay, instead of acceptance. Okay. Okay. Right. Obvious market state of compression instead of acceptance. This is not an acceptance state. This is actually, if you give attention and understand what I'm trying to teach you guys, you understand that it is actually a state where the market is actually already forming a compression. So I'm gonna say ARM off for gold. So I'm not gonna touch it, until the next, continuation is being formed. So instead of, placing a trade right now, which is unreliable based on the signal or the structure that we're looking at, I'm going to wait for, this section being test. Okay. And then right here, okay, so it will start to form a new, it might start when it start to form a new form of continuation, then I see it might be a really good chance to trade for this section. So for now, gold, I'm not going to touch it. but I'm gonna pay attention for this level, okay, because I want to see the price, what happens to the price when it start to, you know, test this price level right here. If it press this level right here, it means that, and it is not successfully being charged, it means that it might form a new sense of balance and continuation, and which means that this right here would be arm on, okay, arm on. So this one would be, you know, my thoughts on gold right now. So I'm not gonna touch it unless, you know, it touches the price of, it tests the price of 5,072. Okay, now let's take a look at euro US dollar, see if we have anything. Same thing as well, go to the 1 hour, have a glimpse. Okay, and if you take a closer look, still a very obvious compression looking range, guys. Sorry to say, but we don't have much, you know, opportunity window based on what I look today. Yes, we do have, you know, a form of support. Okay, we have a support point, but still, if you take a good look, it is market not going into acceptance. Okay, the seller is way more fierce than the buyer right here in euro US dollar. Now take a look. Okay, you don't have to be an artist to draw, but all you need is a normal good looking eye, and you can see there's compression. Now guys, am I going to trade this kind of structure? Yes, I will trade this kind of structure, but today, because of our trading strategy is actually doing ARM, which is agreeable rotation model. So what I'm looking at is not, you know, this kind of model when I trade during intraday trading. This kind of model, this kind of structure is only for swing trading. When I'm planning to, you know, hold for longer positions, I will look for this kind of model. But right now, this is not something that I look for. Okay, this is not a range that we are looking for, and I'm not gonna, you know, I'm not gonna self hallucinate myself to trade something that is actually not there and it's against my very own trading strategy. But if it's not there, then it's not there. It's fine for us to look for another pair. But euro US dollar, you know, as far as I seem, it is actually what I say, arm off. Okay, arm off. So I'm going to give you a reasoning. The market state is compression more than acceptance. Okay, more than balance. Okay, it is, and what we are trying to trade, our strategy, our edge, we trade market balance and acceptance. Okay, so you look at the higher time frame, it is compression, it's not acceptance. If so, I'm not going to do anything, okay, based on the whole chart. Okay, so euro US dollar, I'm going to fold. Okay, I'm going to fold for this one. Let's take a look at GBP US dollar. Nope, this is not something that we GBP USD. Let's take a look at the 5 minutes. Yeah, it starts to go to balance again, but we need more context to see if it's valid. Okay, guys, you see, this is what I mean by give attention instead of pay attention. If you really pay attention, then you will tell yourself, here might be a place for you to trade, right? Which is something like this. you know, if you get my trading strategy wrong, you will start to think, oh, this is actually the place that you want to trade. But the truth is, if we really want to trade, market balance, it cannot depend on this one. It needs to be at least here. You see the context? This is what we are looking for. So we cannot, for this one right here, this is actually still in a compression state. But how do we know that it went from compression back to balance? Now, it went back to balance because of this one. Okay, instead of here, it goes here, and then it goes down, goes here, goes down, goes here, goes down. So this is where, the point where we will start to pay attention. Right here. Okay. Trading intraday doesn't mean that gambling. Trading intraday doesn't mean that every, trade is possible. The fact is there's no possible entry unless, the price actually touches this zone. Okay. So it need to test this one, and start from here. We can do a small short trade to play with it, because after the price touches this zone, it means that the compression is already broken. For example, what does it mean that compression being broken? Very simple. Take a look at here. This is compression, obviously, right? And how does the compression is being broke? It's broke by the price actually broke this entire section, and then the compression is being broke. It means that it is being rejected by the price, which means that the price agree and has now formed a new balance. Okay, form a new balance zone. Okay, which allows us to trade ARM. But right now it's still not there yet, which means that we need to wait as well. So GBP US dollar still a long way to go. So let's see other pairs. Yeah, we say that we want to focus on 3 pairs, but just for the sake of live stream, just for the sake of having more time with you guys, it's okay. Let's just go to other section and try to analyze the market and see, is there any potential ranging market that is actually forming a new balance zone. Chaotic as well. Still a formation. Trying to form here. The balance zone is already happened. A breakout. And the price, didn't actually pull back. There's no pullback. It started to form a new range. Okay, but the thing that I don't like about this range is that it has a form of little compression somewhere around here. So for me to place, I need to wait for extra signal to see, is it now forming a new level. Let's take a closer look. Okay, the price is being accepted. Okay, this is where the price is being accepted. There's no valid there's no valid there's no valid signals that is indicated that is telling us that this is actually a balance. The reason behind this, we need to have the candle body we are dependent on the closing and opening price of the price of the market to show us where the players actually accepted the range. But right here we don't really have it. Somewhere around here. Yeah, it's not a solid one, but if you take a closer look, the compression is actually much more obvious. The compression is actually much more obvious than balance, to be honest. Touches. Let's take a look at the 5 minutes. Yeah, for 5 minutes, I think, let's take a look. Yep. So for USD, JPY, Japanese yuan, if we want to place a trade, yes, we can do a little bit of intraday trading, a small scalping right here. But the reason behind it is because that we have a compression combining with another signal would be, the price maybe wanna touch here and have a pullback to try it again. So we have two momentum to really leverage on to place the trade. But still, we need to wait for the price to touch this zone, which I'm gonna add an alert. Okay, it need to touch that zone. Okay, it needs to touch here before we do anything. So what I'm expecting, the market to move, okay, it is actually like this. Okay, it's gonna break through this zone. Okay, and then it's gonna come back here, take the position, and then just come back here, and then go here, here, here again. But it's fine because even if so, we already managed to hit our TP, right? 1 to 5 ratio. So, but before that, we still need to, this is actually the most potential trade, I see so far, okay, for US dollar, Japanese yuan. But still, we need to wait for the candle to hit that price zone. If not, nothing much to do for now. Well, the market is not, that volatile today. The movement is very slow, just like us when we are doing. Maybe a lot of people are still in their holiday, but yeah, that is what I see. Let's take a look at you. See, guys, it's not really going down, you see. This is what I mean. You see, it's charging through, going down here, and then the candle will go back down here again. So not really a good, not really, good probability for us to trade ARM. So far we've analyzed like 4 pair, but it is all ARM. Most of it is ARM off. Only 2 is ARM on, but still on is because that we still need some confirmation to confirm that it's on. Okay, so for US dollar, Japanese yuan, I needed to hit this price range to confirm that it is ARM on. Okay, oh sorry, it's here. Okay, for gold, I needed to the price to come to this zone to trade. So yeah, based on this one, nothing much. Nothing much in the market to trade today, to be honest. Bang Bang Sandy say coming late. Yeah, I think, yeah, this is what I want you guys to understand. Not every day is the day where, you get opportunity to trade. Um, quick revise on, people that come in late so that you guys understand what I'm actually teaching today. Just a moment. Yeah. So a quick recap, of what does it mean to trade ARM. Okay, so a quick recap for people that come in late, so that you can understand what I'm trying to teach you guys. So I mentioned about, we need, the trading strategy that we use today is actually this one, okay, which is, the agreeable rotation model, aka ARM. Okay, now what is ARM, right? It is designed for stable market, and we need the market to show a signal that it's going to a stable phase. But based on what we see just now, it is actually not in a stable phase. We've analyzed gold, we've analyzed Euro GBP, USD JPY, but most of the market, price movement is currently in a compression state, which is not really showing us the validation that we need to really go for, arm on. So most of it is really arm off, right? So it's all, most of it is off today, and it's just like fishing. Sometimes you go to the sea and the fisherman didn't know that will he or she catch the fish or not, but still he go out. And he also accept the fate that not every day that you get the chance to, you know fish for, a good fish. So that's just how reality of trading is. Okay, so quick recap, agreeable rotation model, ARM. And it's not about right or wrong. It's about, every phase of the market can offer opportunity, but just you need to know what kind of phase that you are in. So right now today I teach you guys about, the ARM, and I want you guys to really understand, what kind of thought process is going on when I analyze the market. Okay, now as far as I see, nothing much, to trade in the market today. And I don't want to force trade it, yeah, even though that I'm, prepared to trade with you guys, but still I don't want to force trade myself. So yeah, that's just, not how it works. So let's take a look at USD JPY. Market is not touching. Yeah, guys. So yeah, that's probably it for today. Nothing much. I hope that you learned something new about, auction market theory, and I hope that you really learn a few things about, what is ARM, which is agreeable rotation model that I use in trading. But right now, really, we don't have a lot of things to trade, and therefore, thank you, to spending time investing your time right here with me. If you're Chinese, wish you a very happy Chinese New Year. And I'll see you guys start from next week onwards. Start from Monday to Friday. We're gonna start, our rotation of live stream with Aurex, with Profit in Peace, and I can't wait to teach you guys and share with you guys more about what I've learned in my trading journey. But right now, so far, nothing much, and yeah, for my VIP students, if you want the deck that I created about auction market theory, feel free to contact Grace. Feel free to contact the customer service so that we can share with you guys what is it about. Abu Bakar Sheikhs, yes, market running slow, very very slow guys, very slow. So yeah, thank you very much. See you guys start from next Monday, and I'll keep you guys updated on the price, the price action that's going on today. So without further ado, see you, peace, and wish you guys a happy Chinese New Year and a happy weekend ahead.